Equity Group made 28.5 billion shillings in net profit during the first 6 months of this year, representing an 11.8% growth, which was driven by higher interest income. The lender increased its loan loss provision by 48.3% to 10.5 billion after the gross non-performing loans rose to 119.9 billion shillings.
Net interest income grew by 22% to 84.8 billion shillings from 69.8 billion shillings reported over the same period last year. This comprised 53.5 billion shillings in interest income on loans and advances and 28.3 billion shillings in interest income from investment in government securities.
Banks are at 8, we're at 7. Despite having a lower cost of funds, at net interest margin, we're still doing poorly because of our decision, a differentiating decision that you start with your customer. You give them an umbrella when there is rain, not when there is no rain.
The gross non-performing loans increased from 97.5 billion shillings to 119.9 billion shillings, and this prompted the lender to increase the loan provisioning by 48.3% to 10.5 billion shillings.
Real estate, manufacturing, building and construction, transport and communications. So it's rather broad-based.
Q1 interest rates were at 11.4%. We then deliberately, as the pressures on interest rate came through, we ensured that we lag that behind so that we get to support the customer to where the average loan interest now is at 13%.
This is in addition to a 12.5% increase in staff cost to 16 billion shillings to drive up the total operating expenses by 25.7% to 60 billion shillings. Just like was the case last year, the listed firm has not declared any interim dividend.
It's at the ratio level that you then see how well positioned the bank is. Coverage, as we've said, above 70%. Cost of risk because of provisions. And then capital adequacy, almost 500 basis points.
To shareholders. Regina Manyara reporting for Prime Edition.